And by the way, the spread of financial distress is exactly like the spread of a virus. It's not just a metaphor. The math is the same.
Jim Rickards, a renowned economist with over 5 decades of experience in international finance, has issued a dire warning about what he believes is an impending financial catastrophe, one that could reshape the landscape of the US economy and send shockwaves across the global market. Rickards' predictions are as unsettling as they are specific, and according to him, the perfect storm is brewing, a series of interrelated economic and political crises that could trigger a massive recession, devastate the stock market, and lead to the collapse of the US dollar and stir social unrest. His warnings are not to be taken lightly, given his track record of accurately forecasting financial upheavals, including the 2008 financial crisis and the COVID-19 pandemic. At the heart of his analysis lies a concerning financial signal: the inversion of the yield curve. The yield curve is an economic indicator that typically predicts recessions with remarkable accuracy. In simple terms, when the yield curve inverts, it means that short-term interest rates are higher than long-term rates, a situation that typically occurs when investors lose confidence in the economy's long-term health and seek the relative safety of short-term bonds. This shift, according to Rickards, is the clearest sign yet that a recession is on the horizon. Investors, worried about the future, are rushing to park their money in shorter-term bonds, driving up their yields. This behavior highlights the growing fear that the economy is heading into a serious downturn, one that could see the US economy slip into a recession much sooner than anticipated. But that's not all. The tech industry is facing massive layoffs, further exacerbating the situation. The layoffs are a troubling sign of the broader economic malaise that is taking hold of the nation. As companies in the tech sector, which has long been one of the key drivers of economic growth, are forced to trim their workforces, the ripple effects are being felt across the economy. The tech sector has been a significant source of high-paying jobs and innovation, but with companies trimming their operations, the impact on the broader economy is inevitable. Unemployment rates are likely to rise, and consumer confidence could plummet, all of which will contribute to an already shaky economic environment. Rickards, who has spent decades advising the highest levels of government, including the CIA, the Pentagon, and the White House, believes that these early warning signs are just the tip of the iceberg. According to him, the true magnitude of the crisis will unfold as political instability takes hold in the United States. Rickards has long warned that the political landscape in the US is growing increasingly unpredictable, and the results of the 2024 presidential election could be the catalyst that sparks a full-blown economic and social crisis. The exit of President Biden from the race, coupled with Kamala Harris's sudden rise as the Democratic frontrunner, has created a level of uncertainty that Rickards believes will lead to a profound and far-reaching crisis. America is heading into a perfect storm, Rickards warns. The political chaos combined with a lack of faith in our institutions could push the economy into a state of freefall, triggering a recession and ultimately collapsing the financial system. The implications of such a scenario are staggering. If the political process becomes so contentious that it disrupts the functioning of the government, the ripple effects will be felt across every sector of the economy. Rickards foresees a collapse of the US stock market by as much as 50%, with widespread panic and the imposition of martial law as the government struggles to maintain control. Rickards' predictions may seem extreme to some, but his unique background as a former advisor to the US government gives him an insider's perspective on the forces at play. He believes that the convergence of economic and political instability will create the perfect environment for a catastrophic collapse. With rising interest rates, a shrinking job market, and the specter of a contested election hanging over the nation, Rickards argues that Americans should be preparing for the worst. As the elections ended and the economic situation worsens and is preparing for a massive power shift, Rickards urges Americans to take action. He believes that those who prepare now will be in the best position to weather the storm. Whether it's securing assets, adjusting investment strategies, or fortifying one's home against potential unrest, Rickards' advice is clear. The time to act is now. Rickards' warning is not just about surviving the storm, it's about thriving in the aftermath. With the right strategies in place, he believes that Americans can not only protect their wealth, but also capitalize on the opportunities that will arise in the wake of the coming crisis. However, those who fail to prepare could find themselves on the wrong side of history, struggling to make ends meet in an economy that is spiraling out of control. As Rickards puts it, The stakes are higher than ever. This is a time to act, not to wait and see. However, that might not be the worst thing to come. If Donald Trump follows through with his threat to slap 25% tariffs on everything imported from Mexico and Canada, brace for some serious price hikes that could totally contradict his promise to ease the burden of inflation on American families. Economists are warning that businesses will have little choice but to pass those added costs on to consumers. That means skyrocketing prices on essentials like food, clothing, cars, alcohol, and pretty much everything you can think of. Trump floated the idea of these tariffs, along with a 10% tax on goods from China, earlier this week, suggesting they'd help pressure these countries to stop the flow of illegal immigrants and drugs into the US. His posts on Truth Social hint that the tariffs could be rolled out on his first day in office, but many suspect this is just a bargaining chip to get these countries to play ball. The high cost of food was a key issue that helped Trump defeat Vice President Kamala Harris, but these tariffs would likely make grocery prices even more painful. The Produce Distributors Association warned that the price of fresh fruit and vegetables would spike, hurting both consumers and US farmers due to retaliation from other nations. Mexico and Canada are two of the biggest suppliers of fresh produce to the US. In fact, Mexico accounted for 51% of the fresh fruit and 69% of the fresh vegetables imported into the US last year, while Canada contributed 2% of fresh fruit and 20% of fresh vegetables. These tariffs could seriously disrupt that flow. Before the election, a huge chunk of voters, about 70%, said food prices were a major concern. Trump promised to get those prices down when he visited a Pennsylvania grocery store in September. However, tariffs could just send them higher. The US is the world's largest importer of goods, with Mexico, China, and Canada as its top 3 suppliers. So, if you're looking to buy a new car, get ready for some sticker shock. The average price of a new vehicle is already hovering around $48,000, and adding tariffs would push those prices up even more. Around 15% of all new vehicles sold in the US last year came from Mexico, and 8% came from Canada. If the tariffs go through, expect even more people to get priced out of the market. Tariffs would hit automakers hard, especially big players like Volkswagen, Stellantis, General Motors, and Ford. In fact, a 25% tariff on Mexican and Canadian imports could cripple the US auto industry. While some analysts believe the tariffs are unlikely to happen because of the potential damage to US industrial production, the threat alone has already impacted stock prices. GM saw a nearly 9% drop, and Stellantis dropped by almost 6%. While the tariffs might push automakers to bring production back to the US over time, that shift wouldn't happen overnight. The US imports millions of dollars worth of auto parts from Mexico and Canada, so even repairs could cost more. The Distilled Spirits Council of the US warned that tariffs on products like tequila and Canadian whiskey wouldn't boost American jobs. These products can only be made in their countries of origin, and tariffs would end up hurting US consumers and hospitality jobs instead. Retailers like Best Buy and Walmart have also warned that higher tariffs could force them to raise prices on essential goods. Best Buy, which operates on slim profit margins, said it would pass the tariffs on to customers, and Walmart echoed these concerns last week. On top of that, tariffs could disrupt supply chains as businesses scramble to stock up before they hit and find alternative suppliers. Some companies might even go out of business if they can't handle the cost increase. Canadian Prime Minister Justin Trudeau, who had a chat with Trump after the tariff announcement, said they would continue working together on trade issues. But Trump's tariffs come at a time when arrests for illegal border crossings from Canada are actually rising, though arrests from Mexico have been declining. Mexico is the main source of the fentanyl flooding into the US, and seizures are on the rise. Trump has legal grounds for these tariffs, despite them conflicting with the 2020 trade deal he brokered with Canada and Mexico, the USMCA. He could use a national security clause to justify them, citing the ongoing issues with immigration and drugs. If he moves forward, expect retaliation from all 3 countries, who would likely impose tariffs on US exports. What are your thoughts on this? Let us know in the comments below.